Today in the grain market, let's start with soybeans. It was a little bit higher. It seemed that winter storm is really giving some support to the futures, but it's the only thing because there is no trade deal. The Buenos Aires Grain Exchange is raising the crop estimates for Argentina. Brazil's big crop is really ready to hit the market, and there's been sluggish shipments, and we're really behind the USDA forecast. So all those things on the bear side, but it seems like that's already digested in the market. So just this winter weather gave the market a little bit of a pop. Corn futures were also up. Interestingly enough, the funds added to the net short position. It has been putting some pressure on the market in general to the bear side, and the idea that they have these record shorts just seems like that they're not turning around. Interestingly enough, because they're so short, if there's any kind of reversal at all, there could be an explosion to the upside, and that's why we see the market up a little bit. Maybe a few of the a few people that are a little bit too short are trying to cover a little bit because they don't want their exposure out there. So there's a real risk of that, especially at this time of the season, and we've had so many weather maladies already, and none of the grain is in the ground yet. Now wheat was lower today. The U.S. just cannot compete with the prices of Russia, and it makes it very difficult for us to move anything. That's one of the reasons why we even lost our Egyptian sale. But it's the exports numbers were out. Those inspections estimates are way lower than we thought, and the blizzard also could even move some acres and change it a little bit. But even looking at that, if we lose 1 million acres, we still have so much wheat in stock right now that it won't really hit us that hard. That's why we're kind of just hovering and kind of consolidating. And even though today the market pushed a little bit lower, Kansas City even further than the Chicago wheat.